Here's what it means to invest into something that's a zero-sum game. You've probably heard this term being thrown around. You're probably not quite sure what it means, but I'm here to tell you that a zero-sum game isn't something scary. It's simply a type of transaction that happens. So basically, let's say you're investing into something like Forex. Now, Forex could be traded, it could be invested, you could hold long-term positions, right? You could literally go buy and hold physical currency, or you could trade contracts. Now, if you're trading contracts, Forex is always going to be a zero-sum game in the sense that if you're selling a certain currency, let's say you're selling euros, somebody's going to have to buy up those euros. So in a zero-sum game, there have to be two parties, one of which agrees to buy and one of which agrees to sell. So when you bring these two parties together, there really isn't something that happened. It's just zero, because if this guy's selling $5 and this guy's buying $5, it evens out and it's at zero. So once that transaction happens, it equals zero, and that's why it's called a zero-sum game. And so one of the biggest examples that I see in my own life is trading Forex. Now, the reason that trading Forex is a zero-sum game is you always have buyers and you always have sellers. There is a psychology about the market where people have to understand that the market doesn't just happen. There are people that are controlling the market, and the people controlling the market, they're affecting it in different ways in order to get people to do the opposite of what they're doing. So for example, if I was a large bank or an institution and I wanted to offload a bunch of currency, I couldn't just offload it all at once. I'm probably holding maybe a couple $1 billion of that currency. And so if I start offloading billions of dollars worth of euro or Japanese yen or British pound or whatever it is, if I start unloading all that currency suddenly, that could cause quite a mess in the markets, and it actually could crash that currency, because all of a sudden you're going to start seeing the value drop down very, very aggressively. And so I need to make sure that that doesn't happen. I want to protect the stability of that currency, because maybe I'm still holding a bunch of that currency. I don't want to shoot myself in the foot by selling a bunch of currency right at once. So the way that banks and institutions usually go about this is they create a scenario which causes a lot of people to do the opposite of what they're doing. And now they could do this via news, they could do this via data reports and releases, or they could just move the market in such a way which suggests that, hey, this currency is going to go up. And if everybody thinks that the currency is going to go up, everybody becomes bullish. And now they're like, wow, this is awesome. This currency is going to keep going and going and going. It's going to the moon, right? As they say, they're going to start buying up that currency. And so if everybody's buying up that currency, the bank is like, wow, what a coincidence. Now we can offload all this currency, and all of a sudden it's kind of hidden in the mix. So the real direction of where the bank wants to move the market is usually different than where everybody else is thinking that it's going to go. So they paint a picture that they want people to see. When those people start making those decisions and start taking those actions that they want you to take, now they can do the opposite of what they just told you to do indirectly, of course. Now, there's not going to be a big sign that says, hey, you should sell now. Although in the recent years, actually, we've had quite a few interesting scenarios where public figures would say one thing about a stock or a company, and actually the opposite would happen. We've also had situations where certain public figures would say something about a stock, and that's exactly what happened, or even a cryptocurrency, and that's exactly what happened. Sometimes a celebrity comes out, or a big prominent businessman or public figure, and they mention some sort of cryptocurrency, and that cryptocurrency just takes off, right? And so a lot of people make a lot of money. Now, of course, that's not totally legal. It's kind of a gray area, but really they shouldn't be doing that, especially if they're holding a bunch of that currency, because they're manipulating markets, right? But there are analysts and professionals who are analyzing certain companies and stocks, and they can suggest, hey, we think that this currency is going here, or we think this currency is going up or going down. Or in stocks, we think these shares are going to go up. We think these shares are going to go down in value. We think there's a stock split coming up, right? We know that there's financial reports coming out. They can analyze and they can predict where different currencies or stock prices are going to go. But you have to be really careful, because again, this is mainstream news. And if it's in mainstream news, I typically take a contrarian view to that. And that just simply means that I'm taking a position that's opposite of what everybody else is doing. It's kind of interesting. I've had a pretty cool experience where I would look at the market sentiment, and I would look at different tools that would allow me to see where different orders are placed. So if I could see and identify that, hey, 80% or 90% of people are bullish on a certain currency or bullish on a certain stock, I would do the opposite. So that means I would sell. If they're bullish, that means they're buying and they're holding and they're buying more and more and more. Now, if I wanted to take a contrarian view, I would literally identify a currency pair that I believe is 90% plus bullish with whatever tools that I have at my disposal, and then I would make the decision to short that currency. And so now I'm selling while everybody else is buying, and a lot of times that would actually work out in my favor. Now, the actual statistics on the success of that, definitely try it out on your own, but I've had pretty decent success. I'd say maybe 75 to 85% success rate with that. I don't have enough data to give a definite answer, but I have played around, so to speak, tried it a couple times, and it's worked out pretty well. Like, I was surprised. I was, at first I did it as a joke. I used to teach people how to trade, and I did it as a joke, and then it just like kept working, and I was like, okay, this is pretty cool. So anyways, I definitely recommend doing your own research on that and figuring it out with maybe some more confluences and finding other factors that could suggest one direction over another. What I will say is that the market has to go up or down, and it very rarely just does nothing. It literally can't do nothing. It can't stay there forever. It has to move up or move down. Now, how far or when? That's the whole $1 million question there. The other thing that I wanted to point out is that your money is already being traded in Forex. So I know it might be a bit of a shock to some of you guys, but if you've ever noticed that banks have a wire cutoff time. So at a certain point in time, in the day, for me, it's 2 p.m. because I'm on Pacific time. For me, at 2 p.m. in the day, I can no longer send a same day wire, which means that if I send a wire at 2:01 p.m., it's only going to get sent out the next day. And why do banks do that? Well, there's a couple theories floating around, but one possible theory is these people, these banks, they're locking up funds so that they know exactly how much dry powder, how much liquidity they have to invest or to trade, perhaps. Did you know that banks trade in the Forex markets? So if they know they have, let's say, $100 million, they locked it in at 2 p.m., they're like, all right, we have $100 million. Well, the thing is that banks and institutions, they can also trade with leverage. So maybe they're trading with 1 to 3 leverage or 1 to 50. I have had accounts personally where I trade with 1 to 500 leverage. So if I have $1 million in my account, I'm really trading as much as 500 million because I have that leverage. Now, banks usually are not going to trade with that kind of leverage, but if they are using leverage, they could use 1 to 2 or 1 to 3 or whatever leverage figure they prefer. But the truth is that they are trading your money in the Forex markets, and they're already participating and they're already making money on it. So if you're not in the Forex markets, I would definitely recommend looking into it and at least maybe finding some way for you to benefit from it, because the thing is, it's currency, and currency moves like a current. So we gotta take a bucket, scoop it down into that current, and grab some for ourselves. And so for me, the way I've done that is using a trading software. And I've talked about that in other videos, but I've developed a trading software that allows me to take advantage of the Forex market on autopilot. So I'm basically using this software to do all my analysis, all my trading for me, and then at the end of the day, produce a profit for me and my communities. All right, guys, thanks for watching. Make sure you like, comment, and subscribe, and I'll see you all in the next video.